purchasing your dream home in the current housing market may feel like, well, a nightmare. That's because high interest rates and even higher prices are keeping existing homes off the market and leaving housing inventory very low. Economic research analyst at Realtor.com, Hannah Jones explains.
Homeowners right now are feeling locked in by mortgage rates. A lot of times if a homeowner is going to sell a house, they're going to have to buy a new one. And so homeowners are not wanting to trade in their currently low mortgage rate for a higher one at this point in time, especially because of this cycle of low inventory and relatively high demand, prices are still relatively afloat. They haven't come down much in a lot of areas in the country.
But building your dream home, now that's a different story. Construction on new single-family homes in July went up about 10% from July 2022, according to the latest report from the Commerce Department. On the other hand, in July, existing home sales dropped nearly 17% from this time last year, according to the National Association of Realtors. The group also noted the average existing home sales price for this July hit about $407,000. The all-time high was almost $414,000 last June. So when it comes to looking for new homes, buyers are building them. Danushka Nanayakara is the Assistant Vice President of Forecasting and Analysis at the National Association of Homebuilders.
So when we think about the total inventory, early 2000, new home sales made up around 10 to 15% of the inventory, and the existing home sales made up the rest. But the fact that we don't have enough existing homes right now, new home sales make up now 30% of the market share. So around 1/3 of it is coming from new home sales right now.
This comes after home construction neared catching up with demand during the pandemic.
So that was kind of the most optimistic time we've seen in the recent past when it comes to this idea of filling the home supply gap. We're seeing construction start to line up or measure up to household formations. Unfortunately, once mortgage rates started to climb, construction activity started to fall off up until recently. We're still a long way from the level of construction that we would need to supply the number of homes for the number of people looking for homes.
But there's a winner in this scenario right now, and that's our builders. That's our building companies. Why are they doing so well amidst this market?
Home builders are in certain markets, really kind of the only game in town.
Nicole Friedman is a reporter for the Wall Street Journal.
For a lot of buyers, there are more options to choose from if they buy a newly built home. And also, home builders are offering incentives to buyers. They are often, helping buyers buy down their mortgage rate. And so if a buyer purchases a new home, they often can get a lower mortgage rate or other incentives.
And so with this demand and Wall Street expectations for a housing recovery next year, stock performance for many building companies has been going through the roof. IBD's Building Residential Commercial Industry Group ranks 6 out of 197. These stocks collectively have grown more than 30% this year through late August. KB Home, Pulte Group, and Taylor Morrison Home have all outpaced the group average. The strength in home builder stocks has been particularly impressive in 2023, given that many have seen a slowdown in profitability and revenue in recent quarters. But a number of builders are forecasting a return to growth next year. Take D.R. Horton, the country's largest home builder by market capitalization. Analysts expect to see fiscal 2023 earnings down 19% year over year. In 2022, D.R. Horton's year-over-year earnings surged more than 44%. But the company is eyeing a recovery, with earnings projected to rise 6% come 2024. However, rising mortgage rates remain a key uncertainty for the company and the industry as a whole. From COVID lows of 2.65% in January 2021, the average 30-year fixed-rate mortgage has now cracked the 7% mark, the highest in more than 20 years. Despite this, builders are still seeing a strong demand in southern parts of the country, where many moved during the pandemic because of the ability to work from home.
There's a desire by a lot of people to move toward more affordable markets, warmer markets where there's more job growth. And so the Southeast and Southwest have both grown a lot population-wise. And there's also just more available land to build in a lot of those states. It's kind of easier for home builders to do business there than in, places like the Northeast, where it's a little bit more densely built up already.
And just who is breaking ground on new homes?
Today's housing market is very challenging if you're a first-time home buyer and you're not able to leverage your existing home equity. And so because of that, more of today's buyers are going to be slightly older because they're able to leverage their previous home equity into a new home purchase and take a little bit of the sting out of today's mortgage rates.
In the luxury market, inventory is also down. However, the landscape for building a mega mansion is a very different scene. Catherine Clark is a real estate reporter at the Wall Street Journal.
So one of the most active markets for the construction of ultra luxury homes in the US was LA over the last couple of years. So we saw this vast proliferation of these ultra luxury spec homes that were asking, $10-20 million plus, all the way to, 200-500 million in some situations. But there are a lot of reasons why that doesn't make sense for developers anymore.
Take Los Angeles. A new mansion tax costs developers 5.5% if they sell over $10 million. Additionally, a proposed wildlife ordinance could prevent developing over 50% of a lot in famous areas such as Bel Air and the Hollywood Hills. Plus, with the market's high interest rates, the price to develop multi-year projects may be too extreme. On top of the cost-prohibitive market, there's no more space to build in such ultra-rich enclaves as Palm Beach, Miami, and Malibu.
You really can't build there without years and years of agita and going through permitting processes and things. So in the way that the non-luxury market sees a huge uptick in construction very quickly, you just can't see that in the luxury market because things take way, way longer.
Still, Warren Buffett's Berkshire Hathaway is getting into the investing game with home builder companies, adding shares of D.R. Horton, Lennar, and NVR, according to its August 14, 13F filing with the SEC. These stocks are trying to navigate through a market of rising interest rates after dropping sharply in 2022, not only because of the bear market, but also due to supply chain issues.
The building material prices have stabilized. I would like to say that we've gone back to the normal issues that we've had. But the question is now, if the demand comes back up, will we see a rather run up in the lumber prices that we saw in 2021 and 2022.
As for the new construction boom, things may look a little different going forward. Although building permits for single-family homes rose about 1% in July compared to last year, permits for multifamily and single-family homes in total dropped 13% over that same time period, the Commerce Department recently shared.
After 7 months of, home builder sentiment increasing, we saw that in August, home builder sentiment actually took a big step back. Even if, home supply is out there, if homeowners can't afford to purchase a home, then that demand is going to start to fall off. And that situation becomes more likely as home prices remain elevated and mortgage rates come back up to that 7% level.
For Investors Business Daily, I'm Meredith Heyman.